So let's just touch on this Brent crude price. It's just breached $120 a barrel. We saw this move coming through last week. It didn't sustain the move to the downside. Is there now a lot of optimism that the Iranian situation could rectify? And are we also worried about demand, especially from China?
I think there are several factors at play here which can explain the drop in oil prices by around $5 a barrel in the last few weeks. One is, of course, that the supply side recedes somewhat on this Iranian talks, but also latest economic data out of China or of the US were not so big, raising concerns about oil demand going forward. And the sovereign debt crisis in the Eurozone also contributed to this decline, since it pushes up the US dollar, which is negative for commodity prices, and also leads speculative investors, money managers, to reduce their engagements, their net long positions in crude oil substantially in the last 4 weeks alone, to the lowest level in almost 4 months. This is always putting pressure on prices.
Yeah. Okay, so Carsten, if we could just delve into some of the fundamental factors versus a lot of the speculation in the market. Many say that, Brent crude is at least, $20 overpriced. Would you agree with that number?
Maybe a bit lower now, since prices have come off already somewhat, but I think $10 to $15 is still a risk premium or short premium in prices, given the fact that the global oil market is still in oversupply. Last week, all 3 energy agencies, the International Energy Agency, US, EIA, and the OPEC, said that the global oil market is in oversupply of roughly 1.3 million barrels per day, and the International Energy Agency admitted that the period of tightening oil markets is over now. So, given that, prices should be lower, rather between 100, 110 than at 120.
It's interesting you mentioned 1.3 million barrels per day in oversupply, because Libyan crude oil exports are hitting that amount. At least that's what's expected for the month of May. Libya is back on board. Is that now going to close this supply constraint that has been coming through from Iran over the last few months?
I think that's the main reason for the oversupply. Libya is coming back sooner than expected, and other OPEC countries such as Saudi Arabia did not reduce their production accordingly, and so far there is no visible supply bottleneck or shortage yet coming from the Iran crisis, apart from lower imports to the EU. No other big customer has yet decided to cut down Iranian oil shipments substantially. So I think that's the main reason for this oversupply, and so there's a risk that prices will slide further unless we get a turn in market sentiment.
Yeah. Okay, Carsten, we're talking about this risk premium, and you're saying that oil will probably drop, will hopefully drop over the next while. How soon could this happen? And if we do see this happening in tandem with the Iran situation being rectified, so in other words, no strict sanctions against Iran, I mean, can we actually expect an oil price of well below $100 a barrel? Is that a possible scenario?
I think that is rather unlikely. We rather expect prices to come down moderately. There are several reasons. First one is that spare production capacities are already at a quite low level. This should limit the price drop in oil prices. And another one is that OPEC countries cannot afford prices of well below 100 due to higher break-even prices, which they need to cover their increased public spending. So they would react rather swiftly, reducing output if prices fell below 100.
Carsten, if you could just play out another scenario for us. If we do see Iran and the situation worsening when it comes to the nuclear enrichment talks and discussions that are ongoing, could we expect oil to breach the key $147 a barrel, the level that we saw in July 2008, the all-time high of Brent crude?
I think that is possible, but in that case it would need the closure of the Strait of Hormuz, which is crucial for the oil market, since almost 20% of global oil supply is being shipped through that channel, and a temporary closure would push prices above that level, at least temporarily.